Welcome to another edition of Chart Talk. I'm Tony Ogorek. I'm here with portfolio manager Jeff Viksjo. And you know, Jeff, as professional investors, many of the big outfits, they have forecasts. Forecasters, people look at those brand names of Morgan Stanley, they look at UBS, they look at Merrill, they look at Goldman Sachs, and they say, I've got to listen to these people because surely they know more than I do, or they know more than any of the people I speak with. But, you know, Jeff, sometimes it ain't necessarily so. So let's take a look at a couple of charts. Here's our first one. Looking at this, interest rates going back to 1926, you would think it's fairly easy to call to make an interest rate call, right?
Yeah, in hindsight, we're looking at interest rates since 1926. It looks like you only had to get really one thing right, which is when it was going to turn south again. So, rates peaked in 1980. You got that call right. It looks like it was pretty easy.
Yeah. And in hindsight, it always does look easy. Now, let's take a look at what actually happened. And here's our second chart. And, that grayed out area is a recession. Now, the dark line, Jeff, is the path of interest rates. And these little squiggly lines is what most of the professional forecasters were forecasting for the direction of interest rates. And here, really an interesting story, isn't it?
Yeah, so if the dotted line is lying on top of the green line, it basically means they got it right.
Right.
And Tony, I'm looking at this since 2003. I don't see that ever. I see almost consistently forecasters thought rates would be higher than they were. And I think it's really interesting to look at 2018 there, right before the COVID drop in rates. You could see they were very late to understand how much rates would fall. They were consistently above. And then at the bottom there in 2020, that's where they were below. They didn't see the rise in rates because it's very, very difficult, Tony, to predict where interest rates are going.
Yeah, so Jeff, this doesn't get a lot of currency with investors. They think they all see the stock market and they think, well, we're looking for stock market, prognostications. And I'll tell you, betting on interest rates, the direction of interest rates, you can lose a lot of money if you get those calls wrong. Mm-hmm. And what we'll see is that, professional investors don't have any more insight into what the future is going to be like than you or I or any of our clients. So really interesting when you look at the history of what these calls are, and it surely doesn't reflect an accurate view of what the future was going to be like. So thanks, Jeff, and thank you for watching this latest edition of Chart Talk.